Welcome to episode 27 of the Visionary Investor Podcast. On today's episode, I'm going to be talking more about how Apple manages its cash equivalents, and marketable securities. Apple, which is the largest company in the world, uses very strategic measures to make sure it's well positioned during market cycles. In front of me, I'm looking here at the cash and money market funds of Apple from March of 2019 through March of 2020, which in March 2020, technically we were in the middle of a recession. Apple increased their cash from $11.8 billion to $24.4 billion over this time period, which was a 108% increase. In addition, Apple decreased its money market funds from $8.7 billion to $4.5 billion during this period, which was a decrease of 48%. We also saw U.S. Treasury securities decrease 61% from $48.2 billion to $18.8 billion during this time period. You may be thinking, why is this relevant? Well, if we look at some of the trends that Apple has gone through over the past year, even though we're not in a recession yet, we notice similar patterns here that makes us question, does Apple know something that we yet don't know? Looking at Apple's annual reports from September of 2022 through September of 2023, we notice the following. Cash has increased 53% from $18.5 billion to $28.4 billion. Money market funds has decreased 83% from $2.9 billion to $500 million. U.S. Treasuries has decreased 23% from $25.1 billion to $19.4 billion. Some of these larger changes, such as the increase in cash and decrease in money market funds, is very illustrative of where Apple thinks the economy is going. As we noticed before the 2020 recession, Apple was increasing their cash and decreasing their money market funds. And likewise, even though we haven't hit a recession, over the past year, from September of 2022 through September of 23, which is their latest annual report, Apple has increased their cash 53% and decreased their money market funds 83%. Further, if we look and see, well, why is Apple decreasing their U.S. Treasury securities by 23%? These are great questions to ask and look further into, because Apple's ability to manage cash and predict recessions is something, in my opinion, that I believe makes them an incredible company, aside from other things that we commonly hear about. Doing an analysis of large companies to see how they're managing their cash equivalents, and marketable securities tells us how the company is investing. What are they doing during this time period? And this coincides with information that recently I read about a bank telling people now is a great time to invest in the stock market and not hold cash. That's completely the opposite of what the largest company in the world is doing. They're increasing their cash. Why are they increasing their cash? Well, based on data that I've talked about in other episodes, and you can definitely listen back to episode 26 to hear more about this, we may just be closer to a recession than many think. And I think Apple's example of what they're doing with their cash equivalents, and marketable securities points in that direction of we may be closer to a recession than many think. Use this knowledge and look at other leading companies and how they're managing their cash equivalents, and marketable securities to determine whether you think we're close to a recession or not. Large companies have access to certain data. Apple is able to see certain patterns that individual investors and even large money managers and hedge funds don't necessarily have the exact same input or peek into. The movement of Apple's cash equivalents, and marketable securities around recessions is something that can be used to predict how far away we are potentially from a recession. I'd highly recommend continuing to follow Apple's cash movement to see what they're doing over the next 3 to 6 months. It'll be very interesting to see where their cash balance is at year end and further the first quarter in 2024. I will mention here that we're looking at patterns, but we're not comparing the same time periods. The time period from March of 2019 through March of 2020 included the past recession. We're not currently in a recession, so things are different, but it seems quite evident that Apple's projecting that we're pretty close to a recession. By Apple adding cash on its balance sheet and decreasing its money market funds, it says quite a bit about what it's expecting over this next shorter 3 to 6 month time period. Clearly, they're displaying that they don't have a tremendous amount of trust in the market, and they want to be able to prepare for what's ahead. Looking at this analysis really is quite different than what some banks and financial institutions are saying when they're telling you now is a great time to invest. We're near the market highs. Do your due diligence. Look at certain key indicators, which if you have questions, send me a message and we can talk more about it, or apply for the Protect Your Wealth program where we go into this in much further depth. Thank you so much for listening. Please make sure to like, rate, and subscribe to the podcast and continue listening or watching everywhere you get your podcasts. Have a great day. Disclaimer: this recording and the information contained within is for educational purposes only. The Visionary Investor does not offer any personal financial advice or advocate the purchase or sale of any securities or investments for any specific individual. We are not financial professionals and make no claims to be. Everything shared by us here, on social media, or elsewhere, including all videos, materials, documents, and any other information, are for educational purposes only. Investing of any kind involves risk. It's imperative that you conduct your own research before making any investments. We will not assume liability of any kind for any losses that may be sustained as a result of applying any methods taught by the Visionary Investor. Please click on the link in the description to read our full disclaimer on our website.